Ever thought about investing in an initial public offering, or IPO? In Indonesia, it's a massive opportunity, but one that's often shrouded in uncertainty. Which IPOs will soar and which will sink? The phenomenon of underpricing in Indonesia, where a stock's price on its first day of trading surges far beyond its initial offer price, creates both opportunities and challenges. For retail investors, analyzing hundreds of pages of a prospectus for every IPO is a daunting and time-consuming task. So what if we could use artificial intelligence to help? Our research team from Binus University developed a machine learning model to predict the potential returns of Indonesian IPOs on their very first day of listing. How did we do it? First, we collected comprehensive data from 223 Indonesian IPOs from March 2021 to April 2025. This data included everything from company fundamentals like profit and debt, then companies' IPO-related information, to market sentiment like the oversubscription ratio, and just as importantly, the underwriter's reputation. This data was then pre-processed and fed into several sophisticated machine learning regression models. Think of it as training a computer to recognize the complex patterns that determine an IPO's success, patterns that are often difficult for the human eye to see. And the results? Among all the models we tested, Random Forest delivered the best performance. It achieved an R-squared of 0.6090, which means our model could explain roughly 61% of the variance in an IPO's listing day returns. So what did our AI model find most influential? The SHAP analysis gives us a confident, clear ranking. Let's break down the top 5 drivers of an IPO's first-day return. Number 1, the listing board. This was by far the most important factor. Why? Because different boards in Indonesia have different rules. Specifically, IPOs on the acceleration board have a strict regulatory cap on how much their price can rise on the first day. This hard limit makes their potential return much more confident predictable. Coming in at number 2, the oversubscribed ratio. This is a pure indicator of market hype and investor demand. A high ratio means far more people want to buy the stock than there are shares available. Basic economics tells us this intense demand creates powerful upward pressure on the price post-listing. Third is the offer price itself. This sets the initial anchor for investors. A lower offer price can be perceived as more accessible to retail investors and leaves more psychological room for a significant pop on listing day. It's a crucial part of the pricing strategy that signals potential upside. Fourth, underwriter reputation. A highly reputable underwriter acts as a signal of quality and trust. When a well-known firm backs an IPO, it reduces uncertainty for investors. This stamp of approval can significantly boost confidence, which in turn drives demand and influences the initial performance. And finally, number 5, the overall market condition, represented by the stock market's performance 2 months prior. While less critical than company-specific factors, a hot or bullish market acts like a rising tide. General investor optimism is high, creating a favorable environment that makes a successful IPO debut more likely. Visually, you can see how our model's predictions, the orange line, manage to follow the trend of actual gains, the blue line, quite well, though they are smoother to avoid over-predicting extreme outcomes. So what does this all mean? This research demonstrates that a data-driven approach can be a powerful tool for investors, especially retail investors, to make more informed decisions. It's a step towards democratizing investment analysis and fostering more inclusive financial access in the Indonesian capital market. Of course, this model is a tool, not a crystal ball, and it's designed for short-term prediction, especially on the listing day. We hope future research with a more balanced data set could lead to improved model performance and broader applicability, such as for the long-term prediction. Thank you for watching.